in less than 24 hours, they've gotten already 68,000 R2 reservations.
Tesla is probably the best positioned of the Western automakers.
And what if I told you that I'm bullish on Tesla and it has nothing to do with EVs?
Tesla has orders of magnitude more data than all of the other auto and tech companies going after this market combined.
All that and more. So let's get to it. Tesla stock ended down at the closing bell on Friday, almost 2%. Continuing that momentum in the after hours, down almost 0.25% more. Sitting at 174.96, the protective puts have been doing me a little bit of justice. I ended up getting rid of my 230 call that was set to expire in July. That was indeed a very, very big loss for me. I still have the 155 call that expires in 2025. Sold a 210 call that expires April 19th. Looks like that will expire worthless, netting me that sweet, sweet premium that I love. But the 177.5 protective put that I have expiring on March 15th, if Tesla stock should fall lower, I'll be able to make some money on the downside, repurpose those proceeds in the purchasing of more TSLA stock. For the week, Tesla is down over 13.5%, and year to date, down over 30%. Predicting the direction of which way Tesla stock will go is fraught with danger. But I do plan to make as much money as I can as the stock continues to slide while buying as much Tesla stock as I possibly can.
Jenny, did we get some numbers in on who wants to buy this car?
We did. I mean, from the founder and CEO who tweeted that in less than 24 hours, they've gotten already 68,000 R2 reservations, which is astounding in itself, but compare that to the amount of vehicles they delivered in 2023, that was 50,000. So that would be more vehicles than they delivered last year, essentially. That's huge.
It's so nice that people want to buy this R2 unit. In less than 24 hours, they have more reservations than they've sold cars in the year of 2023? Does that sound like a demand issue to you?
Well, if Tesla is the poster child for EVs in America, then the industry is currently seeing some warning signs. Shares of Elon Musk's company have lost more than a quarter of their value so far this year. Just this week, they're down more than 10%.
One of the key things that I try to do when I'm investing is separate TSLA, the stock, and Tesla, the company. TSLA, that's volatile, that's erratic. The success of TSLA depends on the buying and selling of the stock. The stable consistency at which Tesla operates, overcoming challenges that other companies seem to struggle with. Now, I'm not saying Tesla is flawless. They do have their troubles, but I'll never use TSLA as a metric to how successful Tesla, the company, is actually doing. The stock market tends to have no idea how valuable a company is until it's too late. Apple, Amazon, Nvidia, you see what I'm saying here? They have no idea what's happening until the stock skyrockets and they're like, oh, the company must be successful. Look at the stock price.
Joining us right now to talk about Tesla and what seems to be flagging interest overall in pure electric vehicles is Mark Fields. He is former president and CEO of Ford. He's also a CNBC contributor. And Mark, what is happening? I mean, there's still a lot of EV cars that are selling, but there's a lot of supply to meet that demand at the same time. Maybe the market kind of rethinking the supply-demand picture?
You know, I would characterize it, this is a market that's going from optimistic to realistic. And you're seeing kind of waning demand. Listen, the growth is still there, right? We know that, EV sales here in the U.S. passed over 1 million last year. It was up almost slightly less than 50%. So it's growing, Becky, but it's not growing at the rate at which everybody was expecting. And so that's why you're seeing all the
sales. What's the national sales? Is it, I don't know, 12, 13, 14 million? Of all automobiles?
The national sales last year was a little over 15 million vehicles. And so you had EVs that represented it. I think it was about 1.1 million. So it was a little over 7% share. So it was up from the prior year, which was about 5.5% share. So it's growing. But the bottom line is it's not accelerating at the pace all of the automakers expected. And that's why you're seeing right now all the automakers make changes, delaying programs, shifting out the construction of plants and things of that nature, because, at the end of the day, the consumer, has the issues around the cost. They have issues around the charging anxiety. you got insurance, and then the big issue for consumers, which nobody really talks about, is with the reduction in prices you've seen here in the U.S. and around the world. But let's take here in the U.S., you know, a Model Y is about 20% less in cost or price this year than it was last year. And that has huge impacts on residual values. So if you're a consumer that owns an EV right now, your vehicle is probably worth a lot less. And I think that weighs on consumers as they think about EVs going forward.
First off, not a lot of car companies are mass producing battery electric vehicles, not at the size of Tesla, not even close. As Tesla is poised to make over 2 million vehicles this year, they've encountered many innovations along the way. As opposed to the internal combustion engine where they're already at mass production, they've already eked out as much of the cost savings, as much of the innovation as they possibly can. Many of the automotive analysts have come to enjoy the stability of what used to be the automotive industry. But with EVs, the cost to produce the cars are coming down. The technological advances that are happening like the automobile industry back a century ago. Nothing about this business at the moment is static. That's why companies have to retool their factories, refresh products, improve the specifications on their vehicles, and this is going to impact their ability to supply customers with the best vehicle possible. The company in the best position to do this for consumers is Tesla with their over-the-air software updates. And as far as the resale value, if you own a battery electric vehicle that's not named a Tesla, you're probably get as much use and enjoyment out of that car as you possibly can. And it's true, Tesla dropping their prices does reduce the resale value of your vehicle. But Tesla's the only auto manufacturer that is actually selling vehicles at this particular volume of a couple million vehicles per year. The only way you're going to see the prices skyrocket back up is if the demand grossly exceeds Tesla's capability of production. In my humble, unprofessional opinion, until the interest rates start falling, you're not going to see this level of demand. So you got at least another year and a half of extremely low prices for Tesla vehicles. My advice? Get your Teslas now, people, while the price is right.
What about competition coming from places like China? Phil LeBeau has been doing an excellent job reporting on what this means for other countries around the world. What's it going to mean for producers here in the United States?
Well, China is a real threat. I mean, let's face it, the Chinese government about 10, 12 years ago said, listen, we missed out on dominating internal combustion engines, and we're going to dominate on electrification. So they encouraged a lot of companies. They gave them a lot of incentives, whether it's government grants or tax incentives. And those companies spent a lot of money on putting capacity in place and building EVs. They've also come up very quickly in the quality of those EVs. And so, you know, what started out as a strategic decision by the Chinese government to dominate in EVs has now turned, Becky, into one that's tactical because they have so much overcapacity right now in China. They sold a little over about 7 million EVs in China last year.
Damn! For those of you keeping score at home, that's about half of what all of America sold in automobiles last year. Half.
And they have capacity for almost 20. So now they're exporting. And for the U.S., you know, there's high tariffs right now. But if they decide to put plants in Mexico, potentially they can use NAFTA to bring those vehicles in, tariff-free. And that's why I believe the U.S. government is going to do something, not for permanent, but some period of time to give the Western or domestic automakers here some time to catch up because of the unlevel playing field.
If they don't, what does that mean for the big three automakers?
I'll fill that one without a shadow of a doubt. That means certain death if they don't have any protection for those vehicles coming up through Mexico. With the big three dragging their heels, either way, you're not going to be able to keep these foreign EV manufacturers from our shores for very much longer.
Well, it means a lot of pain and hurt ahead. Listen, at the end of the day, it's not only the labor that's much less for these Chinese auto companies. You know, a lot of the elements for the batteries are made locally, so that it's lower price for them. And so it's going to be a really hard time. If you think it's hard now, it's going to get even harder. Tesla is probably the best positioned of the Western automakers.
What? Say that again?
Tesla is probably the best positioned of the Western automakers because they are the most vertically integrated. But you look at some of the newcomers, like Rivian yesterday announced a new products, but you look at some of the players there, they need scale to survive. And I think that will put them at the most risk if the Chinese products come through.
Not a happy Friday for Tesla investors, not a happy 2024 for Tesla investors, as we've seen, maybe just some weak headline news. Kevin and I have been talking about this all week. We haven't seen anything positive on Apple or Tesla over the last several weeks, and the stock's been taking a hit here, down 29%. Do you have any data that says, hey, maybe this is an opportunity?
I tell you what, we do. I mean, we've actually issued a bullish alert to our hedge fund clients. I think it was 2 weeks ago, something like that, at the end of February. So we've got a lot of, it's not incredibly strong data, but it's contrary to the stock's performance, basically. We see a divergence opportunity with the stock falling and most of the data that we have being fairly strong. Now, when we look at a lot of the data, I mean, it's pretty strong. The only model that isn't doing fantastic on a year-over-year basis is the Model Y, which has been their strongest performer. So it's got a high bar. The truck is, obviously way out there because everyone's anticipating it. I think there's been a few deliveries. I haven't seen one in the wild yet, but I'm looking forward to seeing the first one. But you can see here that most of their vehicles are doing well. The Y is a concern because it is one of their best performers, and the bar is high there. But it's going to be interesting to see what happens once the truck starts getting delivered. And I will say they've been putting a lot of pressure on their competition. I mean, when you look at the price drops that they've pulled off, Ford has had to kind of match. They dropped their Mustang Mach-E down to $48,000. They dropped it $8,000, but still higher than the Model Y, which also qualifies for the tax credit, and the Mustang does not. So they're creating a lot of problems for their competition. But you look at just how they're doing compared to some of the competition, you can see Tesla's increasing web visits, Ford and GM not so much. So we've got good data on them. Everything is fairly strong. The mentions themselves are up about 5% on a year-over-year basis, while the stock is just getting crushed.
Another prime example of TSLA doing poorly, while Tesla, the company, seems to be doing just fine.
I like Tesla long-term based on the data. I like the company personally, but I don't let that get in my way. I read the data, and the data looks pretty good. With the sell-off, that does warrant, in my opinion, buying of a dip here and heading bullish into the rest of this year.
Landon, what if I told you that I'm bullish on Tesla and it has nothing to do with EVs?
What? Continue, kind sir.
You look at the portfolio of businesses that this company has and the other things in the pipeline that this company has, and there's a whole new reason, a whole new book you can write on why you're bullish Tesla. Like, I'll read them. How about the mega pack that they think by mid-2030s, early 20, or like around 2040 is going to make more money than the cars? How about the power wall? 3 different kinds of power walls, 4 different kinds of charging stations, robotics, ROBOTAXI, gigafactories, all these other things besides EVs.
Get 'em!
That could be game-changing for a company. And my theory on the EVs is Elon Musk is playing a long game to put so much pressure on these other companies that he's going to be the only one left standing. And then there's the China problem with them making too many cars, and they're going to dump them on the rest of the world. So that's a longer play. But all these other parts of their business, the pipeline, they've got 4 or 5 really good businesses within Tesla if you eliminate the cars, Landon.
I agree. I think cars only is a buy on Tesla. I think when you add in everything else that you just talked about, especially, the robotics, I think, it's a longer term play, but that one really gets me excited 5 to 10 years from now. I mean, they could be the world leader in that. It could be, the cars could be a footnote as to what this company does.
Ding, 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 ding! Tell him what he's won, Johnny! Your mother. Right. 90+% of their revenues come from the automotive. And you're talking about it being a footnote in the decades to come? There isn't an auto manufacturer. No, scratch that. There isn't a company in the world that has this many irons in the fire, this many avenues of potential revenue. And honestly, they just scratched the surface. We have no idea what Tesla is planning to release here in the future. All I know is whatever they release, your boy wants it.
So cars only, I'm bullish. Add in everything else, then you're really, really talking. I'm very excited. And you know, it's not like this CEO has a problem multitasking. I mean, he can do a lot of different things at once. So I'm not worried about that. And you know, just you can see it in the chart here. I mean, the blue line's people talking about this company and its products. The gray or the lighter line is the stock price. I mean, you shouldn't have them moving away this much without an opportunity. So this is an opportunity in the short term, and then long term, all the things you talked about. So I mean, this is one that I think you can, you know, buy the shares and stuff them into your mattress and check back in 5 or 10 years. And I think you'll be really pleased.
I think I will do that.
You've got some data on the Cybertruck. You know, of course, that's probably getting a lot of talk there. But is this about maybe their lineup of cars getting a little bit of stale? Now, the Cybertruck, it's new, right? But it's going to be an outlier as far as sales. Do they need to come up with a new model here? Because it seems like everybody else is doing that, especially over in China, where they've gotten competition from BYD and others. But now, yesterday, Rivian announced that they're coming out with their R2, and they actually just announced, the CEO just announced that they have over 68,000 reservations for that in under 24 hours. So is competition part of the problem too, along with the hybrid story?
A world without competition is better, but it doesn't seem to faze Tesla because they seem to always have the best product, and there's always hype for the next best thing out there. But then when the car's actually realized, when it's delivered, you start comparing it, and what we've seen is that Tesla holds up where others are maybe, you know, the hype, you know, it outpaces the reality. So
to all the other car companies in the world, you've been weighed, you've been measured, and you've been found wanting. Tesla destroys you in performance, functionality, technology, and the best bang for your buck. They're destroying you on price. But that doesn't mean you should give up. No, Tesla cannot supply the world with their battery electric vehicles. The goal is 20 million vehicles by 2030. The world will sell around 100 million. Somebody's got to eat up that other 80%. As for Tesla needing a new model, no, they just need a category killer in every one of the segments that matter.
So this AI revolution is going to be broad-based and is going to benefit a lot of companies. On the GPU side, of course, we have AMD as competition, but many people do not understand that there's a lot of other surreptitious competition evolving out there. Each of the hyperscalers is evolving its own chip strategy. You have a Tesla that has designed its own chip for an AI chip for the more specialized autonomous driving opportunity.
Not to mention the humanoid robot Optimus. I'm sure they're going to have specialized chips for that thing as well.
I want to move on to Tesla because you brought it up a moment ago. You've been a long time bull on Tesla. You have been buying shares recently after selling them for most of 2023. The stock down about 30% so far this year. We covered the news this week that shipments from Tesla's Shanghai factory sank to the lowest in over a year in February. The challenges facing the EV industry have been well documented. We talked about those a lot. Why do you still like Tesla, considering all of the challenges in the EV space and also what many critics would say are disappointing fundamentals?
So yes, you're right. We were selling last year as it was in the $300 to $400 range. It's back to $175. And this is what portfolio managers do. We have a 5-year investment time horizon for Tesla, and our price expectations from here, I mean, we see roughly a 7 to 10-fold increase.
What?
I know we're in the process of revising our model, so I'm not at liberty to give you the new number. But
would that new number be higher or lower than 2,000?
Well, we're pushing it out a year, and therefore it will be higher because the autonomous taxi platform opportunity will be in full force, we think, and we believe that Tesla will get the lion's share of that market here in the U.S., if not elsewhere. Autonomous taxi platforms are SaaS models. Tesla's current gross margin is, well, it's in the teens right now because it's been cutting prices, but we think normalized, the EV margin is in the 30% range. SaaS margins are in the 80% range. Most analysts focusing on this stock have nothing in their models, or very little, for autonomous. Our confidence that autonomous is going to happen has increased because it has happened.
You got companies out here taking fares for party tricks, essentially. Waymo, Cruise. If people are satisfied with that level of autonomy, they're going to get their socks blown off when Tesla unveils FSD minus the beta tag.
We see Waymo successful. We see a lot of success and commercial success, that is, in China. It can be done. We think Tesla will launch a national service. And Tesla, this is where AI comes in. Tesla has orders of magnitude more data than all of the other auto and tech companies going after this market combined. And what's important about that is that it has corner cases that nobody else has. Rare occurrences on the roads that it has recorded and it is prepared for, but others aren't.
Cathie,
they just don't have.
I just want to jump in. It's kind of like a running joke with the Tesla community, because Elon Musk says every year we're going to have this autonomous driving technology, and every year since he started saying it, 2017, 2018, it has failed to materialize. Why are you so confident it's going to happen in the near future?
Well, because it has happened, as I just said, and so it's not if, it is when. That's the most important reason. Interestingly, in his last conference call, Tesla's last conference call, Elon said, yeah, I know I've been wrong about it, so I'm not even going to make a projection. I actually thought that was good, and maybe it has a better shot now. And we're looking at some of their hiring and their job postings and seeing rumblings in different cities that they're starting to get ready.
Where will you be when the stock market finally realizes this? In conclusion, in 24 hours, Rivian has more pre-orders for the R2 than they produced vehicles in the entirety of 2023. You've talked the talk, RJ. Now it's time to walk the walk. The market is no longer optimistic on EVs? Sounds like a buying opportunity to me. While Tesla is putting pressure on everybody in the automobile industry, they're doing things outside of automobiles that people should have their eye on. ROBOTAXI, Optimus, the energy division, the list goes on and on. That's all I've got for you today. Be easy. Peace.